Where do I start? Which path is right for me? And who do I trust? The who do I trust for us is probably the most critical piece, and we go into it in great detail. And one of the reasons I like this fund is because it's a low barrier of entry and allows you to get your money out at any quarter. And so we can earn people's trust.
Check out the website simplepassivecashflow.com for podcasts, videos, articles, and free e-courses. If you guys have any specific questions, feel free to reach out to the team via email and we'll get you pointed in the right direction, whether it be an educational course or information about syndication deals. If you haven't read my book, The Journey to Simple Passive Cashflow, click the link below to get a free copy. Thanks to John and the Wealth and Freedom Nexus podcast. Our team is here to help you take the first step, or if you're a seasoned investor, then we're here to expand your reach into alternative investing.
You know, for the most passive returns in real estate investing, I like to put my money with Freedom Family Investments, a team I personally trust because they pay me steady streams of cash flow, hassle-free, all while doing the things I love. Returns are better and more reliable than the stock market, up to 12%. I love that tax benefits offset capital gains or your W-2 income. For a little insider pro tip, knowing who to trust is key to success in investing. Freedom Family Investments has a perfect track record of paying their investors right on time. To learn more, text family to 66866. If you want to invest on autopilot with people I personally trust and with a team who cares about you reaching your financial goals, go ahead and text family to 66866.
Are you tired of trying to keep ahead in the rat race, only to have so much of your hard-earned money going to the tax collector? Equity doesn't pay the bills. Retirement savings don't pay you now, and there are only 24 hours in a day to work. The only solution is passive income that pays you 24/7 now, not 40 years from now. From vetted investment opportunities to tax saving strategies, let John guide you through all the confusion and take control of your financial life in pursuit of financial freedom. So sit back, relax, and welcome to the Wealth and Freedom Nexus.
Hello, and welcome back to another great episode of the WFN cast. I'm your host, John Rickgarn, investor, educator, and realtor. If this is the first time joining us, feel free to follow me along my social media platform tags, wfreedomnexus.com. You can follow and subscribe, rate, and review this podcast, as well as follow youtube.com/wfreedomnexus. Or you can follow the WFreedomNexus hashtag on Instagram or Twitter, or well, I guess I should say it's called X now. So with that, for those returning, I certainly hope you've been enjoying the podcast. Hard to believe we are in the hundreds of episodes now. I remember reading back when I was kicking around doing a podcast back in late 2020, early 2021, that there is a thing called pod fade that I can't remember off the top of my head, but so many podcasts don't make it past episode 7. And so often I come across podcasts that I like, I rate, I subscribe to, and then all of a sudden it's like, gosh, I haven't heard anything from them in quite some time. And then I look and it's like they just had a last episode and they just kind of vanished after that. So pod fade is very real. With that being said, I'm glad we are over the hump of episode 100. And for all those recurring subscribers out there, again, thank you for your patronage and your support. Definitely couldn't do this without you. Now, if this is your first time joining us and you found value in this podcast, be sure to rate, review, and more importantly, share with others. I emphasize share because I believe knowledge is power, or applied knowledge is power. And if you find value in this content, you know, whether it's investing in precious metals or passive investing or starting a business or asset protection or learning about self-directed retirement accounts, just a number of the topics that I've covered on this podcast since 2021, why not share with others? Why keep it a secret? You know, if you think of even just one family member, friend, colleague, coworker, etc., that, gosh, I just learned this. I didn't know you could self-direct a retirement account and purchase teak in Nicaragua and 10x your returns. You know, I bet Bill, Jill, Johnny, Paul, I bet they would find some benefit on this. I bet they didn't even know you could do this. So again, I emphasize share. It just takes a couple of seconds to share that with a member of your contact list to, spread the knowledge, spread the worth, and hopefully more people can find this podcast and enjoy the content that I bring every single week. Now, today's guests, Flip and Dani Robeson, are the successful entrepreneurs of multiple companies. They last appeared way back on episode 4, showcasing all that the great state of Ohio has to offer for those looking to invest for cash flow. And the more I thought about it, it's like, wow, I haven't had them on the podcast for almost 2 years. I've talked to them numerous times, met them in person when we went on a road trip back in 2022. And also they've been a longtime supporter of this podcast as well. So I figured, I think it's time to bring them back on this podcast and kind of expand on what all Freedom Family Investments offers. With that being said, every investor is different. Some are very aggressive and some are very, very conservative. When it comes to real estate investing, some have heard so many horror stories of real estate investing. And, I completely emphasize with that. It's not all sunshine and rainbows and unicorns like some of the gurus out there promote it to be. Mortgage rates have doubled in the last 24 months. Insurance premiums and property taxes have gone up double digits. Ask me how I know that one. I've mentioned it on this podcast a number of times. So, at the double digit increases with property taxes, insurance premiums, mortgage rates going from the 2, 3, 4% up to the 7% at the time of this recording, cash flow is getting squeezed on, this is even kind of why I've taken a step back from acquiring new properties. While I see the benefits of real estate, from the tax benefits, from the depreciation, from the cash flow, looking back when I started, with Mid-South Home Buyers and Spartan Invest down in Tennessee and Alabama, respectively, it's just a little bit of a hard pill to swallow to invest twice as much seed money, if you will, for a down payment on a property, invest twice as much to get the same net cash flow. It's just kind of a little difficult to stomach, at least for me. So with that being said, there's just so many nuances of property management, finding good property managements out there. In fact, one market that I am actually exiting because as of, yesterday, at the time of this recording, I signed on to my 4th property manager. There's a whole story behind that. I'm hoping to highlight that at the end of the year when hopefully I sell my property and exit out of that. So again, I emphasize that property management, real estate ownership is not all sunshine and rainbows. A lot of gurus talk out the positives, but tend to glaze over, if not ignore, the negatives. And there are positive and negatives. And, as any good investor should do, they should try to mitigate as much risk and look to investments that make the most sense for them. Finally, like I mentioned, Tennessee and Arizona, Alabama, other out-of-state areas where some people are just a little nervous of investing out of state if they can't see, drive by, touch the property. That's just is how they are. Nothing wrong with that. Actually, I have a good friend that's invested in real estate, but he likes to invest right here in Minnesota. He does not want to, nor does ever plan to invest out of state at any time. So like I said, completely understand that and understand that every single investor out there is different. So with that, Flip and Dani, my guests returning to the show, they also understand that. And that is why they've actually expanded their offerings to various funds or investment funds, some 506C and some 506B. Now, if you're unsure of what those definitions are, what they mean, hey, can I invest in this? Can I not? Be sure to check out episode 60 as we do a deep dive into that with a real estate investment attorney. But regardless, maybe you just, maybe you have a large chunk of cash sitting in your retirement account. Maybe you're uneasy of the ups and downs of the stock market. Flip and Dani can help with that. Maybe you want liquidity, yet still earn a good return on your money, say starting at 6%. Flip and Dani can help with that. Maybe you're looking for the tax benefits to offset your W-2 income and pay less in taxes. If you think Uncle Joe is spending like a drunken sailor and want to keep more of your money in your pocket, well, Flip and Dani can help with that. In fact, Flip and Dani can probably help just about any investor out there. regardless of what your financial benefit is that you're looking for, we talked about tax benefits, cash flow, liquidity. If you're a beginning investor or an experienced investor, Flip and Dani have decades of experience between them and have worked, various projects, various real estate investments, funds and projects nationwide that they can pretty much work with any investor out there, depending on what their needs, their wants, and desires are. Now, on a final note, you'll notice for this episode, Dani does most of the talking in the episode. There is a reason for that. On the flip side, and pun intended, no pun intended, we'll see, Flip will be doing most of the talking as they come back in December for another great episode of hashtag Screw the W2. If you have not checked out my YouTube channel, feel free to go into that and subscribe, as every week I release another episode of a Screw the W2 episode for an entrepreneur or an investor that was able to break free of the W2 rat race, so to speak. So like I said, Flip and Dani, and mostly Flip, will do the talking on that episode, Screw the W2, that will come out here in December of 2023. And just so you know, for all the longtime listeners out there, for at Screw the W2, based on all the feedback I've gotten, while YouTube obviously is very popular, especially for more of a visual or educational platform, I've had a lot of feedback that, hey, John, we really like this. I understand you wanted to grow your YouTube channel, which I definitely have. It's expanded over to 1,600 subscribers at the time of this recording. This hashtag Screw the W2 YouTube episodes will be relaunched in 2024 in podcast format. So whether you're a Spotify fan or Apple fan or Overcast fan, iHeart, just to name a couple platforms out there, for those that have enjoyed the inspirational stories of how to escape the W2 rat race, that will be relaunched in 2024 in podcast platforms. So be sure to click subscribe on this and keep your eyes and ears open for when that launches in January of 2024. So with that, here is Flip and Dani after a word from one of our longtime sponsors of the show.
Check out the website simplepassivecashflow.com for podcasts, videos, articles, and free e-courses. If you guys have any specific questions, feel free to reach out to the team via email, and we'll get you pointed in the right direction, whether it be an educational course or information about syndication deals. If you haven't read my book, The Journey to Simple Passive Cashflow, click the link below to get a free copy. Thanks to John and the Wealth and Freedom Nexus podcast. Our team is here to help you take the first step, or if you're a seasoned investor, then we're here to expand your reach into alternative investing.
Welcome back to the Wealth and Freedom Nexus podcast. It's been about 2 years since you've been on, so thanks for coming back on, and hope everything's good in, well, Ohio, but also Central Florida where you're at.
Yes. Thank you so much for having us. We're super excited to be here, and we were excited when your email came across our desk, and we're like, yes, we'd love to talk to you again.
Yeah,
absolutely.
Yeah, it's kind of funny. I know we talked off camera. I was like, how long has your podcast been going on? And I had to think. It's like, well, it'll be 2 years come November. I'm not so good at math. But yeah, my son's age minus 2 months. I'll just use that from now on to figure out how long it's been.
So much easier.
Now, and I don't know who wants to jump in first, Flip or Dani. I know last time you were back on episode 4, we kind of talked more of, why Ohio. A lot of people, I don't think, look at Ohio for a rental market. I won't name names, but there was an investor I networked. He called Ohio the armpit of the United States. So I won't call him out by name, but I was just like, okay, there's a lot of stigma, shall we speak. It's not a hot and sexy market like Austin, Texas, or anything like that. And obviously, you went into detail, what Ohio has to offer, the numbers, so on and so forth. But I want to take a little, different, side topic, if you will. You have actually started among all your businesses, if someone out there, hey, I like turnkey, I just don't want to own property for whatever reason, but I want to have my money make more money than a CD and the certificate of disappointment in the bank making 2% or whatever. So with that, you've started a number of funds that investors can partake in. I don't know who wants to jump in first, but can you what are they? How do they work? Kind of give us the details on it.
Yeah, absolutely. So just like most people, real estate is a journey for us, right? And we continually are learning new things and investing in new vehicles and figuring out what we like the most. One of my favorite things to do is talk to investors and just say, hey, what are you investing in these days and why? And out of that conversation came a lot of different things. I think it was, let me just count. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 different things that we said, okay, these are important things to investors, but every investor on a different path prioritizes those 11 completely differently. We actually just sent out a survey yesterday just to get another piece of feedback for this stitch in time and for this particular market. So having that type of feedback is really important to us, because not always our path aligns with where our investors are. And we want to have, a group of vehicles that will apply to everybody on their journey. So we are now launching 4 different funds to align ourselves with the different journeys of our real estate investors and those that we've surrounded ourselves with. So one is a speed fund. Its big feature is liquidity, because a lot of people say, Dani, we love your investments. We love you. We want to invest with you, but there is a portion of our cash that we want to make sure stays liquid. So I was like, okay, ding, ding, ding. That's one of the 11. And then another one of our funds is a power fund. That one is short 2 to 3 years. And we're giving little equity in that one, because some of our investors, again, are just like, hey, I don't mind where the interest rates are at. I don't need some huge high interest rate. I would love a chance for some of the upside. And so we gave a debt fund that allowed, I think it's 7 to 8% interest, depending on if you are going to stay in it 2 years or 3 years. And then you get some of the upside of that particular fund. So I don't know where it's going to range, and I don't want to try and predict, but the idea is to get higher returns for investors who want that little cherry on top, if you will.
Sure.
So that was one that served another need for the investor, in terms of, I wouldn't say even it was a need, it was a want. It was, hey, I like this, but I want this. And I said, okay, let's just try it out and see how many other people want that same thing. So this is going to be an experiment for us to see how many people latch on to that particular fund. The third fund is an agility fund. It is taking our syndications and putting it all in $100 million fund. Now, we'll still do syndications aside from that fund, but this one's going to allow people a lot of diversity. So we have investors that are like, I want to pick which apartment complex or which self-storage that I invest in. And we have other investors that are like, I just want to be spread across all of them, so that if one of them is having a bad time, another one may be winning, and it just balances out and gives me the diversity and safety that I'm looking for, and the certainty of returns. So that agility fund is allowing us to still keep syndications for those who want a little bit more choice of which they're investing in. But the agility fund will allow people who say, I don't want that, I want diversity instead, I want to invest in all of them, the opportunity to do so. That whole time is 5 to 7 years, and that one has tax benefits. So that's more of those 11 features, right? That people are like, I want to invest, set and forget it, and not think about having to, do something again in 12 months or 2 years or 3 years. And then the last one is, what is the name of that one? It is the growth fund, and that's a private equity fund. And that fund is investing in businesses that are also focused in real estate, and allowing a bigger upside, because businesses have, good heavy cash flow. And we are one of those businesses that will be invested in within that fund, because we're starting to acquire other businesses that align with our family of companies. Our very first acquisition was probably 2 years ago, where we bought a property management company to merge with our property management company. And we did that because when you're running a property management company, you are not making any money until you have a certain number of doors. So we said, how do we fast track this so that we can actually be making money and not just sucking the other companies dry trying to fund it? And so the growth fund is going to focus on businesses and growing them, and allowing the investors to have an even higher rate of return within that fund, and the diversity.
All right. So good. Wow, a lot to unpack there. I'm going to have to probably double check my notes after this recording. So going back to the top, now the speed fund, well, actually 2 of them. So the speed fund, what kind of I know you said those liquidity, but what kind of a time frame is associated with that? And then also the growth fund, is that more than 7 years or also 5 to 7 years?
Yes. So the growth fund, also 5 to 7 years. So the
Okay.
growth and agility are really for our long-term investors that want diversification, want high returns, and are looking to build wealth, not worried about getting their money back in and out, right?
Gotcha.
Of the deals. The
Okay.
speed fund is going to feature that liquidity piece, and it's every quarter. So every quarter, you can just say, hey, I want my funds back at the next quarter, or I want 50,000 back at the next quarter. Every quarter, so January 1st, March, February, March, June. Is it June? I need to write them down. But every
Was it
calendar
June
quarter.
30th,
Thank you.
September 30th, or calendar year? Yep.
That's right. Yeah, every calendar quarter, they're going to be able to say, "Hey, I'd like funds back," and then we can give them their funds back. They can choose partial. It doesn't matter. That particular fund also has compound interest, so that's one of the 11.
Okay.
Some people wanted compounding. They don't want the distributions. They just want to reinvest them. So
Gotcha.
that particular fund allows for monthly distributions or
Okay.
monthly reinvestment.
All right. And then I'm guessing with obviously the every quarter, so it isn't, quite as liquid as I have in a savings account. I can take it out tomorrow per se, but then I'm guessing with the flexibility, the returns are probably lower, kind of, trade-off between the two.
Exactly, yes. So the
Okay.
returns on that one is going to be 6%.
Okay.
And if let's just say you were invested in it, John, and you said, "Hey, Danny, I've got $50,000 in there. I'd like 25 out," because it's $25,000 minimum. So
Okay.
it's also the lower end of all of our funds in terms of how much capital you need to invest to get in. So
Okay.
if you told us that, we might not need to wait until the next quarter. We could say, "Hey, John, we've got that now. Are you ready for it?" And we can time it according to your preference. But we're being very cautious, right? Because we still need to invest this money in order to give fund a return and give our investors return. So we're really specializing in short-term loans and transactional funding, and that's going to allow us. But there is going to be some funds that maybe in a 6-month or maybe in a 12-month, because reality is, as we create this fund, I talked to a lot of people and they said, "Danny, it's not likely I'm going to take my money out. I just want the peace of mind that I can."
Sure.
And so we know that we're going to have a portion of these funds invested in longer illiquid things, and then keeping some specifically in liquid things, so that as people want out, it's very easy for us to give the money back and forth. So it's going to be a little bit of a work on our part to just balance it all. But we love this particular fund because one of the common questions we get, there's 3. Where do I start? Which path is right for me? And who do I trust? The who do I trust for us is probably the most critical piece, and we go into it in great detail. And one of the reasons I like this fund is because it's a low barrier of entry and allows you to get your money out at any quarter. And so you can we can earn people's trust, right? It's only $25,000. Put it in, get it out in 90 days if you want. In the meantime, you'll have 3, distributions of interest. And so that was also an idea beyond the benefit of giving people liquidity.
Gotcha. All right. And then, so you mentioned the 25,000 minimum, the lowest of all the funds across all of these. If you don't have the funds yourself, like, gosh, I just don't have $25,000, $50,000, in a bank account right now. I'm assuming you welcome your retirement accounts, self-directed IRAs, which I've mentioned on this podcast a few times.
Yes, of course.
For investors seeking DSCR financing, check out timothyhero.com. The guy has closed over 150 DSCR loans in the last 2 years and has been appearing on podcasts and written about by journalists. He's well connected with some of the best lenders in the game and can get you the financing for your rental properties.
I really like self-directed funds. I love educating people on how you can put it with a self-directed custodian and use those retirement funds to be able to invest in real estate, because I just feel like it's one of the best vehicles out there to invest in, especially with qualified money. It's fantastic. We always talk to people about their different buckets, right? Because you're already in a tax advantage account. So if you wanted to go into the agility fund where there's tax benefits, you can't get additional tax benefits, right? So sometimes we're talking to those people about their qualified funds and say, "Hey, you actually might want to be in the growth fund or the power fund or the speed fund." Probably not the speed, because it's not like you're going to grab it out anyway. It's your retirement funds, right? So I think growth and the power fund are ideal for those qualified funds.
Cool. Right. And then, Flip's just been kind of joining us, watching us talk back and forth. So I'll ask him the next question. Flip, of these 4 funds, not going down too technical of rabbit holes, but are these 506Bs, Cs, Regs As, mix of the above, or how are these funds structured?
Well, these funds are all right up Danny's wheelhouse, and she's the one that's running them all. So I think without me getting in trouble, I think she better answer that question.
All right, so we're back to Danny. Got it.
I was actually going to joke about that. I was like, oh, Flip really helps run the other 5 companies while I built this one. And so sometimes we're at networking events and conferences, and people will go, hey, and they'll ask a question like you just did. And Flip will be like, where's Noah?
Over there.
That's a really good question.
So to answer your question, we do have 506Bs and 506Cs. We don't advertise 506B funds because we can't legally.
Exactly.
So the ones we're talking about here are all 506C funds. But we created a graph that I think that you can find it on our website. If not, people can email us and say, let me take a look at your graph, because it has all 11 of those features that we talk to our investors about. And then it checks off the box. So if you're looking for tax benefits, here's where you want to invest. If you're non-accredited, here's where you can invest, because we've got turnkey rentals, we have private money lending, we have master notes, all for non-accredited investors. But the funds specifically we're talking about are for accredited and 506Cs.
Gotcha. Okay. And for any of those listening, this is your first time, or you're returning, or maybe just need a refresher of what is accredited, non-accredited, or all that jazz mean, feel free to pop back into episode 60, where it was actually an entertaining conversation with an attorney. I know that sounds contradictory, but we actually did a deep dive into what does 506C, B, A, X, Y, and Z, all that mean. But just kind of wanted to set the record straight for all those 506Bs, for non-accredited investors, but you have to have a pre-existing relationship. So be sure to reach out to Danny Lynn or Flip, or if you reach out to Flip, you might just point you to Danny Lynn like we just had now. But then you can establish the pre-existing relationship. I don't know if you talk to Flip, and if after 30 seconds if he points his finger, if that counts as a pre-existing relationship, or if it needs to be longer than that.
That's hilarious. If you want to talk turnkey, Flip's your guy.
Gotcha. So all right, sounds good. So now with these, funds, I know we talked a little bit about this. I actually had a friend text me the other day. Helped him with a real estate transaction. They bought a plot of land and ended up selling it. And I was just kind of like, hey, what'd you end up, doing in the funds? And he's like, well, right now, don't quote me, I think it was a Charles Schwab account or a money market account or something. And I was making 4.6 something percent, which even 2 years ago, that would have been phenomenal. But he was like, well, it's safe, it's insured, it's, I don't want to say guaranteed, but it's highly likely they'll get the money back. But likewise, we're talking, these, 6-7%, obviously longer time frame, possible upside. As far as anyone putting money in these funds, are there any guarantees or preferred returns, or what can investors expect to see if they're putting up this money for hopefully getting a return?
Yeah, so great questions. I love that you mentioned preferred returns. I love that you mentioned the word guaranteed, because we can't say guaranteed. I mean,
exactly. Well, you can, but the SEC might be knocking on your door. And,
that's right. That's a big no-no. But I did have an attorney tell me, he said, Danny, when you always give preferred returns on all of our funds, and we do. Everything is preferred returns. We always want to align ourselves with our investors, meaning you win when we win. So you get paid first, we get paid next. And so everything in our funds are preferred returns. And the attorney said to me, he said, Danny, you can't use the word guaranteed, but the best way to say guaranteed is preferred returns.
Yeah, what's the old was it Benjamin Franklin, or I think had the quote, the only guarantees in life are death and taxes, or maybe it was someone else. And now, as I recall, and for the investors that aren't familiar with this, basically what preferred returns mean, let's just say you have a deal, and obviously you as the investors or the fund operators, you won't want to make money as well. But if, something happens, extra expenses, whatever the case may be, the preferred returns basically means the investors get paid before the operators do. It's just more of an ordering sequence. Is that correct?
That is absolutely correct. And
Okay,
I
perfect.
love that part because, we are the operators and it's up to us to be able to work our tails off to get our investors money so that we can earn money too.
Yeah. Now, the last question I have to ask about this, and I've brought this up on a number of podcasts, is the lovely tax form, the K1 that people get, especially if you're investing in funds. Now, I won't name names, but there's one fund I've invested in for years. Every year they have like clockwork, like, yep, on February 26th, you'll get this, on March, you'll get this, and March 18th, you'll get the K1, yada, yada, yada. On the other flip side, one kind of flippantly, arrogantly just said, yep, we'll have these out by September. And if anyone that follows real estate or taxes knows, well, let's see, filing is April. So you're telling me I automatically have to do an extension without even trying or giving me some kind of an ETA. How does the tax structure work? When when can investors expect to see a K1 if they are investing outside of a retirement account, for instance?
Yeah, so I love that you brought that up. One of the things that Flip and I pride ourselves on is being incredibly transparent and telling people literally on the phone, look, we're human, we're growing, we're going to make mistakes. And as we do, we're going to identify them, figure out how to fix them, and hopefully never have them happen again. But just trust us that we have your back. It's why we vertically integrated all of our companies, because we wanted more control over renovations, property management, the brokerage, the funds and syndications, so that we could go in our office and walk down the hallway to find somebody, knock on a door and fix the problem. So the reason I preface it with that is because we've had growing pains with regard to K1s. And I have personally made videos standing right where I am today saying, hey, investment team, here's what's going on. Here's what happened. Here's why it happened. And here's what we're doing to fix it. So we have partners in that syndication and fund space. These are really, really big deals. So we don't do them by ourselves unless it's in our backyard. If it's in our backyard, we have the capability to do everything ourselves. If it's in Mississippi, North Carolina, Menor, Ohio, which is another apartment we have to have partners that are helping us. And in that partnership, sometimes we're waiting for the K1 from them in order for us to process them, in order for us to get them out to the investors. And so we've gotten our K1s done on time, but if we were waiting on somebody else, we were just stuck and our hands were tied. So I literally did a video telling our investors, here's what we're doing. From now on, whenever we partner with somebody, we have a letter of intent, and it requires them to give us our K1s early so we can get it to our CPA, so our CPA can in turn turn it around and get it to you guys on time. And then I just had to transparently apologize for late K1s. And it's happened 2 years in a row because of that particular situation. So I literally have a notepad here of a bunch of things that I write down. And it has on here, January 1st, start bugging our partners for the K1.
Happy New Year. By the way, get this to me.
That's right. Yeah, so it is very important. And I also explained, we extend our taxes every year. So it doesn't even bother us personally as a company and personally on our investments, but other people that want to file in a timely manner, it can be stressful for them. And so it's really, really important that we do the best job that we can to be able to serve others.
Yeah. Well, and again, not to go down the tax rabbit hole, and everyone's situation is different, but you can do an extension. Yes, IRS does it for probably millions of Americans every single year. The little caveat with that is if you file an extension and you still get a return, well, they're not going to pay you interest on that return, even though it took you 3, 4, 5 months to get it. On the flip side, they're not as kind as the other, like, Flip, you screwed up. You still owe us $20,000. By the way, filing was back in April, so now you owe us whatever their interest rate is. So that's, the little caveat with Uncle Sam that I don't think enough people stress that with. Yeah, you can do an extension, just be prepared for paying extra if you still owe money. But, good to know that you're transparent. We're all human. We all make mistakes. And if there's one topic that's probably most confusing of all, it's probably the tax code.
That is for sure. 100%. I'm glad you always educate people on, I think, really important things that are rare that you won't hear them on other podcasts, right? Not everybody brings them up. And I love it when I've seen some of your stuff where you're in front of the whiteboard, drawing In fact, I don't know, I think that might have been your last question, but I wanted to tell you, you had mentioned something about the 4.75%, I think, return.
Yeah, I think it was, it was over 4. I want to say 4.65, 4.75. I think it was a Charles Schwab money market account, if I remember right. So.
Yeah. So in preparation for us coming on here today, I actually did a math example, if you don't mind me sharing.
Sure, go ahead.
Okay, so I compared the $50,000 at the 4.75. That was the number that I used because I wanted to see how our speed fund compared to it.
Okay.
So the same 50,000 at 4.75 was going to earn 2,375 a year. I wish I was at your whiteboard right now because I'd write it out. But the same 50,000 at 6% was 3,000 per year. So it's an extra 625. And then if you added the monthly compounding, you would end the year with $53,083.89, which is an extra 84. So I started running it, and you should have seen me like this morning. I was running like 5-year examples, and so everybody talks about compound interest being the 8th wonder of the world, and it really was one of the things that we get called, and they say, which of your funds allows me to reinvest my distributions? I don't need it. I want that interest, earning interest. And it's really, really powerful when you look at the math. Yeah.
Well, I think, like you said, it's the compounding or, velocity of money, just keeping your money working, compounding. It's kind of funny you mentioned that. And, we've talked about self-directed accounts. I'm still amazed I hear stories because, they always talk about like, the median retirement account is X or whatever source you're looking at. I'm surprised and still shocked at how many people they put money in an IRA, but they don't do anything with it. They just yep, I put $6,500 in for this year, and it just sits there. It's not invested in anything, and it's like, what did you expect?
Exactly right. Yes, that surprises me as well. But hopefully they're listening to your podcast and they don't do that anymore.
Exactly. So, closing now for this podcast, and again, I appreciate both of you taking the time out of your schedules to educate my listeners. And if anyone has any questions on these funds, reach out. Again, 506C, 506B. Episode 60 goes a little bit more in detail of that. But Flip, maybe Dani can point the finger back at you this time. As far as the other 5 companies, can you share what all? If this is the first time one of my listeners has heard about Freedom, what are all the other companies that you own, operate, partake in, and help investors grow their money?
It originally started with our turnkey company, which is a company that buys the properties and then puts the tenant, their rehabs of property, then puts the tenants in them. And then, so we manage them. And we sell those to, other investors, whether they're, they could be next door, but they could maybe they're out-of-state investors. That's our main company. But with that, we created our own renovations company. We created our own property management company. And then with the property management company, we needed a broker. So we created our own retail brokerage, and we created our own acquisitions company. And what am I missing? I think that's it.
Company.
Yes. Well, we've been talking about you for the last half hour. And so, but that's the main thing. And we originally started, it's 6 years ago, a little bit over 6 years ago. And we were just strictly in the Dayton, Ohio area. And now we've branched out. Now we're all the way through Cincinnati and all over. We're basically Southwest Ohio. We'll probably be moving over into Columbus soon. We're really getting further and further out with our reach on all of our properties.
Cool. All right. And if any of my listeners, and they've probably heard the name of it before because you've been generous enough to sponsor this podcast a time or two, but if anyone's interested in learning more on the speed fund, the agility fund, the growth fund, et cetera, or a turnkey property, what's the best way to reach out?
You can go to our website at freedomfamilyinvestments.com.
All right. And if you're driving and that's a mouthful and you don't have a pen and paper handy, again, I'll have this in clickable format in the show notes. So please don't try to, reach over a pen and swerve and crash. Just click on the link when you have a stopping time. So,
that's right.
Flip and Dani, it's been great to have you back on the podcast. Wish you the best of success in your continued growth, and hope to have you back on the podcast at a later time.
Thank you so much, John.
Thanks so much, John.
Thank you for listening. Be sure to share, rate, review, and subscribe on your favorite podcast platform. For more updates, check out www.wealthandfreedomnexus.com. realestate.com. Remember, nothing on this show should be considered tax, legal, investment, or professional advice. This show is produced solely for educational and informational purposes. Please consult an appropriate and licensed tax, legal, real estate, or business professional for specific advice for your situation. For distribution or publication rights or media interviews, please contact the host.